This is a step-by-step guide on preparing an income statement. An income statement is one of the financial records of business transactions prepared periodically, usually yearly. It provides essential information to groups within and outside the organization, for example, workers, government, and investors. An income statement shows the profit made by the business at the end of the year or quarter. Income statement is one of the final accounts prepared at the end of the year. The other ones are Statement of Financial Position, sometimes called the balance sheet, and the cash flow statement. The income statement is divided into three sections, namely, trading account, profit and loss account, and the appropriation account. The trading account is where the gross profit is calculated. Gross profit is revenue minus cost of goods sold for the period. However, it is gross loss if the revenue is less than the cost of goods sold. The profit and loss account is where the operating profit, profit before tax and profit after tax are calculated. Gross profit minus operating expenses produces the operating profit. Operating profit minus interest expense is profit before tax. Profit before tax minus tax is profit after tax. The appropriation account is where the profit after tax, or net profit, is shared between the shareholders and the business. Part of it is paid as dividend to the owners or shareholders, while the remaining is retained in the business for future use. We will explain, using a simple example. The following information relates to an electric car manufacturer for the year ended the 31st of December, 2024. Revenue, $171,070. Cost of revenue, $99,000. Research and development cost, $12,000. Selling and administrative expenses, $5,000. Other operating expenses, $2,500. Interest expense, $1,800. Tax expense, 20% of PBT, profit before tax. Dividend, 60% of net income, or PAT, profit after tax. The first part, the trading account section. Revenue minus cost of goods sold is gross profit. $171,070 minus $99,000. Gross profit is $72,070. The formula for cost of goods sold is opening stock plus purchases minus closing stock. Cost of goods sold considers costs that are directly related to each unit of the goods being sold. It is also known as cost of sales or cost of revenue. The profit and loss account section. Gross profit minus operating expenses is $52,570. Operating expenses are other costs that cannot be traced to each unit of the product sold. They are also known as overheads. The figure for operating expenses is research and development cost plus selling and administrative expenses plus other operating expenses. That is $12,000 plus $5,000 plus $2,500. It is $19,500. Operating profit minus interest expense is profit before tax. Profit before tax minus tax is profit after tax. Tax is 20% of profit before tax. Tax is $10,154. Profit after tax is $40,616. The last section, appropriation account. Profit after tax minus dividend. Dividend is 60% of profit after tax, $24,370. The retained profit is profit after tax minus dividend. It is $16,246. Putting all together in one account. The income statement for the year ended the 31st of December, 2024 is shown.